Properties that have passed 15 years have very little headroom for growth. Is that always true?
After the 15 years, property prices appreciate very little or none at all. Take a look at these three properties in the Hillview area. According to the transaction data, those who have bought these three properties since 2013 are still stagnating at the same price in 2021. Why is this happening? Well, that's because these three properties have crossed their 15-year shelf life since 2013.
Why am I bringing up this discussion? The first reason, my home, this over here. It's a flat that's more than 20 years old, so I'm also concerned because I'm also on a 99-year lease, correct? I'm concerned whether properties that are past 15 years really have no headroom or not. If it is indeed 100% true, then I might need to dispose this. The second is that I don't want my property or any flat that is past 15 years to have this negative sentiment as an old house with it.
In Chantilly Rise case, the lowest PSF was $450 in 2006 and today is approximately $1,000 per square foot. Coupled with the 15-year shelf life, there's very little potential headroom for growth.
And I actually wonder what do the homeowners of Chantilly Rise feel about that advertisement. So maybe I'd like to step in and give a more balanced point of view. The third is that I do want to make property investments someday again. And if the findings today are of any help, that would definitely steer me in the right direction when it comes to the choice of what I invest into. Follow me on this journey as we really explore this concept or the stigma of old properties having no headroom for appreciation is really true or not. If you're keen, continue watching on. Hi guys, welcome back. In today's discussion, I really want to be constructive. That's why I actually dropped an email. I mentioned over there that my conclusions are different. I wanted him to share a bit more in terms of strategies first before I come up with my own findings, so that if there's any parts that I get wrong, hopefully I can be corrected then already. Because this thing is always true, you don't know what you don't know. But so far, there is no replies. So let's go ahead and raise up some discussion points. But before we get further, right now, I own an old property, correct? So I'm definitely biased for old properties. You should take whatever I say with a pinch of salt and make your own critical thinking. The second is that I'm also a layman like you. I only have superficial data to look at. So I'll be presenting what I can find only, and maybe the data points are sometimes just insufficient. So with that clarified, let's move on to explore Chantilly Rise, which is a key focal point of this advertisement. What I came to realize is that the transaction price for Chantilly Rise seems to be on the upward appreciation. This is data collected from 99.co. But as you can see in this 10-year chart, this is transaction price, not PSF. Then the second part is that it is all bedrooms. So you're going to see 2-bedroom, 3-bedroom, 4-bedroom all meshed within it. I've done the homework. It seems quite obvious that the 3-bedrooms transactions dominate the landscape. In any case, if you stay there and you know more details, do leave in comment sections whether that is accurate or not. But this is my finding. For the 3-bedroom, it's quite obvious to see that the prices have hovered between 1 to 1.5 million from 2013 to 2020. That was the gist of what is mentioned in the advertisement. Subsequently, in 2020, it started to move upwards. Again, if you look in terms of the overall index, Singapore property prices have appreciated. So it's kind of followed the overall trend. But when we pull back from the information that's presented, we'll see that the data point is drawn until probably 2021. Not just that, the scale from 1 to 1.25 million is a bit too narrow. We can't really see the incremental changes. Even the one on 99.co, if we were to change the scale to 1 to 2 million instead of 0 to 2 million, we'll get a much better appreciation of price percentage changes. That is why, again, back on this chart, you realize that the tail end kind of looks a bit flat. Optically, it's also very different from what has happened before 2012, correct? When we see treatment on a year-to-year basis, we kind of gravitate to that has happened from 2008 to 2012. In that period of time, PSF was $450, but it's doubled all the way to close to $1,000. Well, maybe this is because the flat is old and the lease is decaying. Chantilly Rise indeed is completed in 1999, but this will come as a shocker to you. Chantilly Rise is actually freehold. So the point that lease is decaying probably isn't true. And referring back to this chart again, I have a few conclusions to draw with you. Back then, when Chantilly Rise was still a new property, We can conclude that firstly, if you have bought new, you are not insulated from price declines. From its completion in 1999 all the way to 2004, it was a rapid decline, correct? That was about 33% drop in a few quick years. That was of course the Asian financial crisis. And then the dot-com bubble crash. So new doesn't mean you are insulated from price decline. Or in fact, new, if you have bought at an inflated price, the decline could be even greater than something that is less inflated. The second conclusion is that it doesn't matter whether it's freehold or not, correct? Because Chantilly Rise is freehold. Prices can fall when the sentiment for properties are affected. But the debate we have today is whether properties stagnate once they are past 15 years, correct? So let's dive into data points for Chantilly Rise 3 bedrooms. Again, that's my guess on what is predominant there. And thankfully, there are not like thousands of transactions. It's quite easy for me to sieve out, and this data, you can go and verify, is on 99.co. From transaction history, I've realized that Block 82, 3-bedroom units can be compared. They are all at the 1,442 or 43 square feet. I have no idea on the facing, so if you are a resident, do share a bit more insights to it. But from the preliminary data, it's quite easy to see that from year 2013 to year 2021, comparing almost apple to apple, from 957 all the way to 1,094. That is a 14% gain in 8 years. 14% gain and a 200,000 appreciation actually is nothing to shout about. CPF OA will compound at an even faster rate than that. And the second part is when you buy the property with a loan, together with stamp duties, this 200,000 gain could probably evaporate already. So let's look at further data points from the green box to the red box, which is the latest transaction. The PSF now is at 1,212. Take note again, this is a 3rd floor unit. The ones we have compared is the 10th floor and the 9th floor. So as we know, properties that are on the higher floor typically command a slightly better price. The gain in comparison for PSF, from 2021 to 2022, the gain is slightly more than 10% in about 15 months. That is really how fast property prices have been escalating, and that's why I'm concerned whether we are closer to a peak than ever before or not. So with that, I'd like to rebut. Properties that are more than 15 years have indeed shown appreciation. I've proven data already with that using the same property itself. But I guess that presentation was trying to drive the point that new properties appreciate more than older ones. This is what is presented.
Despite being lower priced than other developments like Midwood that are selling at $1,500 per square foot.
So let's dive in to look at data again. Midwood condo would TOP in September 2022. On Property Guru, it's mentioned that completion is 2024. It's almost fully sold. And let's look at some of the price trends. Over here on Property Guru, you can see 1-bedroom units have kind of climbed up, correct? Because the scale, it's from 1,006 to 1,850, it looks like the appreciation is very strong. Now again, just now I explained about scaling, correct? If you put it from 0 to 2 million, then this increment cannot be seen. While when it's presented like that, the prices look to be going to the moon. But if you see the increment on a year-to-year basis, the gain is also only about 10%. So now let's change to 2-bedroom. The gain seems slightly smaller, correct? But just now when we look at Chantilly Rise, we look at 3-bedroom. So let's put apple to apple. 3-bedroom ones surprisingly have a data point that suggests that prices are really indeed flat. 2019 to 2022, the increment is only $25 PSF. In conclusion, I'd like to reinforce a few things. We cannot compare Chantilly Rise 3-bedroom 1,212 PSF against Midwood 1,680 and say that it's lousy because there's a price gap. Again, when it's sold from developer controls their price. They'll usually mark up above what they paid for the land as well as construction costs. And as always, appreciation is a percentage game. Which means if I bought Midwood at 1,680, 99-year lease again, and you bought Chantilly Rise freehold at 1,212, if prices move by 100 PSF, guess who made a bigger percentage gain? It's probably you, correct? So with that, let me know your thoughts whether you agree or not. And for this presentation, I actually researched way wider than what's presented today. And I do have extra material to share with you. So if you're keen, smash or subscribe. Let me know in comments whether you want more topics like this or not. As always, stay constructive. I like to learn also as an investor what I've missed out. And if you would also like to continue your own learning process, check out some of my previous tutorials. The first is whether interest rate spike will cause a property crash or not. The second is this question: should you buy the biggest property you can afford or not? So if you are curious for these two topics, check them out also, and I'll see you there. Take care as always. Goodbye.